What is up, everyone? Welcome to Crypto Capital Venture. Thank you so much for cruising by. Let's jump into the video. That's the question, isn't it? Is it not the question on everybody's mind? Like, let's put aside everything else that goes on in crypto, all of the drama, all of the opinions. Aren't we all here just wondering what's going to happen next? What should I do? Like, what should I do with my portfolio? When should I buy? When should I buy heaviest? Should I sell? Should I sell and buy back when it dips another 30%? I've been accumulating for years, but should I sell and then buy back? Should I do that? Should I try and trade like that? What should I do? That's the question on everybody's minds, right? It's a question on my mind all the time, always wondering, right? When we don't have this parabolic uptrend in an obvious bull market, and even traditional markets are cruising to the upside, when we don't have that kind of confident play of momentum, we get into this world of, what do I do? And that's what I want to talk about in this video. And I want to take Bitcoin charts and use it really as a roadmap, as a guide. And I want to take history. I want to take my own experiences and talk to this, because this is my plan. And this isn't financial advice. I'm not telling you what to do, but hopefully, just kind of hearing my opinion might help you. This data point might help you figure out your plan. And I want to start with this tweet I just tweeted a little bit ago. Buying crypto now is uncomfortable. It feels like 2018 all over again. I bought some Cardano a little bit ago. I remind myself that feelings do not matter in this market. Follow the data. And this is part of this tweet. Kevin Svensson, go follow him. He covers a lot of Bitcoin content. Feels more like 6K in 2018 before a major red candle, to be honest. So let's talk about all of this. So my original tweet and sentiment is basically 2018. This feels like it, uncomfortable, and I can't even put an exact date. It was like all of 2018 was uncomfortable. If you were here, you might remember it was uncomfortable. For me, it was especially because I started my YouTube channel. This YouTube channel, I started here. I had such a great confidence that Bitcoin and crypto was in this long-term uptrend, and I wanted to get involved, and I really wanted to start building. And so I started building on YouTube as one platform, and I had to do content pretty much through this entire thing. It was uncomfortable. And then along that time frame, I was trying to figure out what we opened with in this video. When do I buy, right? Even right here, I think I remember being like, look at that weekly candle, like the bottom is in. I don't know. I have to go look and really watch these videos that I was doing. I didn't have as much knowledge of historical data on these charts in Bitcoin as I do now. And I think we're even in a more powerful position now in terms of crypto opportunity than maybe even back here. So let's break this down. Kevin Svensson was talking about this area, $6,000 on the Bitcoin chart. Feels like it. I've mentioned that previously as well. It really feels like it. So many similarities. 20-week moving average resistance right here that Bitcoin's seeing on the weekly, and it's been seeing resistance there since December, right? And here we go. 20-week moving average resistance before the big drop off into the 2018 bear market low. So the 20-week moving average resistance is one data point. We got the 20-week moving average cross. Let me actually move my chart down a little bit. The 20-week moving average cross right here below the 50-week, that green line below the blue line. We got that, right? Got that cross there. We have this decreasing volume, very similar to what we had back then, decreasing volume, right? So a lot of similarities. The one similarity I actually don't see is this. At the time when Bitcoin was trading sideways at the $6,000 area, Bitcoin was trading within a Fibonacci, a macro Fibonacci channel right here. And you can see the $6,000 area is in that channel. So that channel is the 618 around 7,600 to the 786 around 4,300. Bitcoin fell actually below and outside the 786. This is a huge data point for me in the long-term macro trend of Bitcoin. I used that 786 line on this macro chart, these yellow lines that you see here. And you can actually see, I charted this back in 2018, and you can see the consolidation that I have in play for Bitcoin, and it is actually playing out very, very nicely so far. We didn't get up to the speculative $90,000 area, but you can just see that's in play. And I'm not sitting here saying it's going to happen, but we're using this uncomfortable bearish data to actually allow us to make decisions that are appropriate for the long term. And this is really what I'm talking really to longer term thinkers and investors here, because that's kind of what I am. I'm not talking about short-term trading here. So let's go back to that Bitcoin chart we were just looking at. So Bitcoin, the one difference is not in its own Fibonacci on this macro chart, which is the last bear market low to bull market high. Bitcoin's actually not even there, right? And the possibility for Bitcoin to fall there is very much in play. So we have the similar data points in terms of what Bitcoin is doing from a sideways perspective, very similar to the $6,000 area. We have these data points, and we can even open up the momentum oscillators, and we can see where Bitcoin is on this momentum oscillator around 41. If we go back here, look at this. Bitcoin's in the same vicinity before the big drop off to oversold. This move to oversold is in play. So we can look at the upside potential for Bitcoin to help make our decisions as well, but we have to use downside on the macro as well, because the downside scenario is 100% in play. And when you start looking at articles like this, the stock market isn't falling like it did in the 1970s, it's even worse. And we start taking into context, oh yeah, the stock market. Oh yeah, there's a war going on. When we start taking into consideration these things, we have to really start thinking about this, right? And for context, this article ends by saying the S&P 500 drops an average of 32% during a bear market. We know Bitcoin is highly correlated to bear markets in the S&P 500 and traditional markets. And then if we go and we actually let's open up the S&P 500 index, let's see what a 32% dip could look like for this. And let's go from this previous swing high, right now down 11%. So as that article is stating, around 1/3 is potentially there if this continues. So if Bitcoin is going to fall off a cliff like it did in 2018, then we will likely see it will be following traditional markets. So we have to keep an eye on that. But all of that said, the data is in front of our eyes to allow us to start making a decision. Now, before we talk about the decision making, I want to go over to the daily chart on Bitcoin and say, okay, Bitcoin is down. But what's going on here? We have this midterm uptrend stemming from January of these higher lows. So we take our previous swing low to swing high for Bitcoin, where it saw that 200-day moving average resistance, and we can say, okay, Bitcoin's technically at a higher low Fibonacci on the on a midterm chart, way shorter term than that macro Fibonacci we were just looking at. But here it is, the 618 around 39,700 to the 786 around 37,000, let's just call it. Bitcoin's in that range. And so Bitcoin could be putting in a higher low, and we can get a rally to the upside. Traditional markets might get some type of good news somewhere, right? And then they're latching onto that good news. And then things might slowly start all of a sudden turning around outside of this fear, and then we might see an upside. So you might be sitting here, wow, Dan, you're not helping me at all. You're basically saying Bitcoin could capitulate basically down on the weekly to like $20,000, or Bitcoin could see support from where we are right now and start seeing an uptrend, and we can be in mid 40,000s in a week or two. Like, that's possible. And you know what? I am telling you that. And the data is very real in front of the screens. But the biggest data point we should pay attention to is this. And we're going to go back to the weekly to really bring this all back together. At least this is my opinion. This is how I'm looking at these markets. So was I buying, or did I only buy in 2018 right here at the bear market low? Was I kind of like, man, I'm so good at this? And, I was doing videos. Here's a video basically actually at the bear market low, December 11th, 2018. I was doing a Bitcoin video talking about it. Bitcoin bottom forming, BTC analysis. That's the title of the video. Is that when I bought? Come on, no. I mean, I was buying. I was probably buying back here. I'll have to go back and try and find when I was buying Bitcoin. But I was probably buying cryptos this whole way down, everybody. And that's the key. That is my approach. However, there are heavier buy zones for me. There are more comfortable buy zones. The worse things get on this weekly chart, the more comfortable things get, right? I've been buying crypto lately. It's been slightly uncomfortable because I'm looking at this Bitcoin chart and I realize the downside that is potentially still in play, and I'm sitting here buying and accumulating. And the reason why it's uncomfortable is because if we're looking at Bitcoin from just strictly all the data we just looked at, price range wise, and it falls into this channel, Bitcoin could be falling another 40 to 50%. What's that going to do to altcoins, right? So for me, it's uncomfortable because that's in play. Now, because it's in play, I monitor and I'm very careful with how much I am buying, right? How much have I been buying lately? I've been buying lately, but I've been buying with this in mind, the fall that is potentially getting ready to happen, this capitulation. And right now, as Bitcoin comes from all the way overbought, right? All the way back here in January 2021. And now we're in May 2022, and it's getting very close to oversold. Things get more comfortable in terms of accumulation, right? We don't talk about accumulation too much when we're in a bull market, in these huge uptrends, right? We don't talk about accumulation that much at all. But we talk about it when we're starting to approach these oversold areas down here, which historically on these Bitcoin charts have proven to be buy zones. And that's where we are right now. Is there downside available? 100%. We know our targets. We've been talking about them on these charts. But to answer the question in the beginning of the video, how do we, as people who have no idea what's going to happen next, how do we go about approaching these markets? This is how, with caution and a plan. My plan is to have a certain amount of fiat available in the heavy buy zone, the capitulation buy zone. But at the same time, I don't want to miss out for any type of just something turns around, right? If there's a lot of on-chain bullish data, there really is. And there are a lot of people all over, crypto social media, Twitter, YouTube, that are very much bullish on Bitcoin right now. And they think that, Bitcoin's going to continue to the upside. So I have to balance my own approach. And it's really why I wanted to do the video is to kind of look at, market sentiment. And you can even just go to any of my tweets and you can look at market sentiment and get an idea. But I wanted to use some data points like Kevin mentioned, the 6K in 2018, and really just start talking about, well, what's in play and how can we use that data to make our decisions? And this is how I'm using the data. I know what's in play to the downside. Previously in these types of environments where we're getting these indicators happening, Bitcoin has actually fallen below this line, the 786 line, 786 line there, 786 line here. Bitcoin's fallen below it. So at the very least, even enter the Fibonacci in the lower 20,000s is 100% in play. So don't want to keep repeating myself, but at the end of the day, everybody, it's all about not getting emotional. It's all about analyzing the data. It's all about accepting the fact that you do not know what's going to happen next, but preparing for both upside and downside. It's a balancing act. And it's very much also a mental balancing act. This is a mental game. If you start working on building your mental fortitude, you will win in this game. I really, really think you will, because we've seen it happen before where in these environments on the zoomed out chart, and I'm talking about these oversold environments, these bottoming out environments, this is where we are. Maybe there's a few months left of pain here, but in these environments, this is where people win. And it takes emotionless approach to the markets. So very simple. I'm just buying sporadically, but I have fiat available in case there's just capitulation to the downside, and I will buy heavy. And that's my approach. What's your approach? Sit back, think about it, figure it out. Everybody's approach is different. There are so many opportunities outside. And when I say I buy, and I'm using Bitcoin charts as a kind of a guide, I'm way more attracted to altcoins right now. I'm way more attracted to Cardano and altcoin ecosystem for accumulation at these crazy oversold, undervalued environments. Because to me, those are the cryptos that are going to overperform and outperform in this next bull run that we experience. Maybe it's in 3 months. Maybe it's in a year. Maybe it's in 2 years. I'm patient, but that's my approach. I appreciate you. Hit the subscribe, hit the like. I'll see you in the next video. God bless.